Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we're going to be taking a look at Bitcoin on the micro 1 hour chart, taking a look at what's been going on most recently and what I think is likely to happen next. As I get into the video, if you find it useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be able to be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's jump right down into this video though, right? We're going to be taking a look at Bitcoin paired up with USDT on the 1 hour chart, and Binance will be our data source. Now, following on from yesterday, obviously we saw a big change in direction in terms of smart money concepts, right? So smart money concepts gave us a false flag of a change of characteristic from bearish to bullish. Obviously, that was a false flag. We got back into our bearish state of play. This is more aligned to what 𝗕𝗪𝗪𝗃 is thinking. Now, because LuxAlgo's indicator doesn't always show us the fair value gaps, we drew this one on here yesterday. Okay, this is a institutional candle here, a smart money candle, however you want to articulate it, basically bringing the price action down a little bit deeper. This is created because there's an imbalance in the order books. Essentially, too much selling pressure was occurring up in this high range. Essentially, the price had to drop down to find equal amounts of buyers. So the liquidity just wasn't there to facilitate the sale at that higher range. So price had to come down to find where the sellers were, or where the buyers were, right? So what you find is that this particular gap that gets created, price will want to gravitate back towards it, fill it out, and liquidity will return into the order books within that range. Now, there's no guarantee that that happens, but for the most part, they usually do get filled out. And of course, it can take quite a bit of time to play out. This one here comes in at $26,830 to $27,111. Okay, at least according to the USDT pair on Binance. So looking at our structure, it looks like equilibrium is just here, right? And this equilibrium comes in at about 26,642 to 26,730, with slight selling pressure just above there as well. At the moment, it looks like we're trying to get a closed position just above that 50 EMA. We're well below the 200 EMA at this point, and the fair value gap is actually above those levels. So yes, it's possible that we push up to the fair value gap here at that 26 to 27K. However, I'm not so confident that that is likely to occur right away. I think that's something that we're going to have to wait for a little bit further down the line. I would expect us to kind of get rejected from equilibrium if we do manage to get a closed position above that 50 EMA as we are progressing upwards. If we take a look at the 4 hour here, you can see that we're almost up in the overbought range on that 4 hourly chart. So I'm still looking for that next move to the downside. Now, at the moment, we do have a strong high and a weak low, indicating that we are likely to keep going down deeper here. Okay. However, that is really only testament to the fact that we are in a bearish character change and below equilibrium. Okay, so that's kind of why you see that weak low and strong high. You can see all this red area here. This is all internal selling. There's also an internal sell block right in here as well. So there's not a lot of positivity to be found and a fair amount of resistance according to smart money concepts. So we're not looking overly too great for the bulls right now, the bears that seem to have control. And I think we're going to see some volatility next week, a little bit more than maybe people are willing to expect. So it'll be interesting to kind of see how everything kind of plays out over the next little while here. But over the next few days, over the weekend, I expect quite a boring sideways trade. Our stochastics will be correcting all over the place. So definitely won't want to be trading the weekend, I don't think. Maybe I will, maybe I won't. We'll see how things change within the data. But for now, it looks like we are probably going to be looking for very, very slow and small movements that will actually take the momentum indicators probably back to the overbought range on some of these other levels. So expect some interesting days over the weekend, but for the most part, my expectations are that next week is going to be another bearish week for BTC. But we'll take a look over the next kind of couple of days and see what plays out overall for BTC. So yeah, the next kind of move here is if we close above this 50 EMA, equilibrium is the next kind of zone. Let's move over into the 𝗕𝗪𝗪𝗧𝗧 side of things. So 𝗕𝗪𝗪𝗧𝗧 is a more complex subject matter. I spoke about this in a little bit more detail yesterday. but you can kind of see here that what we're trying to track is a 5-wave structure. Inside the 5-wave structures, we have ourselves nested 5-wave structures, and it's all kind of nesting in quite nicely. Everything at the moment is actually playing out quite nicely for this impulsive movement to the downside. Realistically, though, it's only going to get confirmed when we drop down lower than the $23,972 level down here. Once we hit that 1.618, we're in a pretty good position. I think it's that, no, it's this one here. Sorry, 23,937. So on our hourly, that needs adjusting a little bit. It's a little bit too high, but you kind of get the idea. As soon as we go down to 23,900, we are going to be in that confirmation mode for saying, yes, we have completed or looking to complete just wave 4 and 5 now to the downside. But where are we right now? Well, what I'm going to do is I'm going to clear out some of this noise because it's just messy as hell. And that's unfortunate, but the way that it goes. So we'll clear that out, and what we'll do is we'll focus in on just this recent move right here. Even though this also looks quite messy, I can clear this out quite a bit as well. I'm going to remove some of those. So there we go. And yeah, I'm going to leave the yellow boxes in. I need those. We don't need this one. Okay, so it can be a little bit messy, but essentially what we've got here is a wave 1, wave 2. In wave 2, it is an irregular flat. Then we have a 3-wave correction for wave 3 coming down here, hitting the target range of 25,884 to 26,144, and now we're in the wave 4. Okay, so we're in that wave 4 position, and wave 4 can go all the way up here, but it just cannot cross the wave 3 origin or that peak of wave 2. So wave 4 can go as high as it wants at this point, can overlap with wave 1 in the diagonal here, but it shouldn't really it shouldn't go higher than $27,500. Okay, and there's a couple of different ones or structures here that are playing out. Let's see if I've still got my, I do. Okay, we'll pull those down. So we've only got 2 possibilities within our final 5th wave movement. Okay, it is either going to be an ending diagonal or an expanding diagonal. I think we are probably leaning more now on the expanding side than the ending, but both are still technically possible within this range here. So wave 4 and wave 1 can overlap in those scenarios. Not too concerned about that. And yeah, for the most part, we are just waiting to see where this plays out, because wave 5 under an ending diagonal is going to come down here and hit our 1.618 target at $24,864, in my opinion. Or actually, it'd be the slightly higher one, sorry, because we're nesting, aren't we? So it's 25,540. That's the minimum expectation there. That is going to then play into a wave 3, where we then have a wave 4 up, and then we hit that 24,864 for the next impulsion, then up for wave 4, then down into that final 5th wave where we have that $23,900 level. Okay, and these are testament to these wave 1s that you see up here. Okay, so all in all, where we currently sit with this one is we're looking for this move up into our wave 4, can push it as high as 27,500 if it needed to, and then we're looking for that move to the downside. Minimum expectation has to be the 25,540, but realistically we are looking to come down here more towards 24,791 and 25,418. So I am expecting deeper movements overall for our final 5th wave movement of this 3rd wave. And all in all, I think Bitcoin's been progressing quite nicely. It's quite hard to see exactly what's going on with the structures. The structures are quite messy, but for the most part, they are playing out very, very nicely as per Elliott wave theory rules and structures. So everything here is actually working out quite well if you're able to kind of, see through the wood and the trees and all that kind of stuff. So I'll see the wood through the trees essentially. So as we have this structure appearing here for Bitcoin, we can see that there's progression to the downside. Now, going long on a structure like this is not a good idea in my opinion. Now, I'm not a financial advisor. I can't give people financial advice. All I can do is say that I wouldn't necessarily want to be going long whilst we have a trend structure based to the downside. Instead, what I would want to do is actually find where we're likely to find reversal points and short with the trend. Okay, the trend is now to the downside, right? And we have that by hitting these 1.618 targets at various different levels. Now, because we are in a trend to the downside, what we want to do is we want to find where wave 4 is going to end, and we want to short the market, right? We want to put our stop losses in good positions, and we want to go ahead and put our target ranges where we know that those fifth waves should end up going, right? And so we can get good risk reward ratio, such as 2.6 or even higher. If we were to come down here, we can see that we get into the 3.0 range, simply just by having good risk management and making sure that you're going with the trend. As they say, the trend is your friend. So you want to make sure that, at least I, in my opinion, want to make sure that I'm going with that trend, and I'm going to short the market when the trend is going down, and I'm going to long the market when the trend is going up. Failure to do so, and you're trying to capture every single wave movement, it can be done, but it is going to increase risk quite a bit. Sometimes these wave structures, like wave 4, for example, should come up higher here, and you might think, okay, we're in wave 4 now, we'll go long. We'll put our stop loss down here, for example, and we'll target out up this kind of a little bit higher. You're going to get a low risk reward ratio, but not only that, you're going against the trend, and this pattern here, this wave 4, might just end short and then just reverse on you and liquidate you, right? So it's important that you go with the trend, because when you go with the trend, you have a little bit more in terms of the reward side than the risk side, because you're going to eventually go in that direction overall, right? So unless you find trend reversals, or you're literally trying to grab that very last one. For example, this is a fifth wave movement. Probably not a good idea at a larger than small movement like this, for example. So I wouldn't want to short the market here, right, by doing something like this, get a risk reward ratio of, let's say, 2.37, short this market here on that final fifth wave of a fifth wave movement, okay, outside of this hourly chart. It wouldn't be a wise idea. And the reason for that is that we are going to be looking for a fourth wave movement that will more than likely liquidate you. And that fourth wave movement is got a part of a bigger structure, right? So it's important that we pick and choose where we go long and where we go short, and understanding that the market structure. And when we understand market structure, either from smart money concepts or from an Elliott wave theory point of view, it allows you to pick and choose when you trade. Sometimes the best trade is no trade, and to actually trade when the market is in your favor, right? So when it comes to where we are right now in terms of the structure, we've seen a good amount of downside, and I think the shorting opportunities are rather limited at this point in time. Yes, I still see a little bit of a move to the downside here. We can do that on the 1 hour, maybe 15-minute charts, and try to take advantage of some of those short positions. But essentially, really the next kind of bigger moves are going to be to the upside, where we're going to be looking to try to capture some of that if possible on some of these smaller time frames as well. Remember though, the trend is down, so if we do go long, it's for a short time period, and nothing is to be too greedy. Just grab whatever profit that you can, but then obviously short the market when the market reverses again, because we are looking for further downside. We are looking to break down lower than 23,972. So if you're long term on this, and you might be thinking, okay, well, I can go short on low leverage or something to that effect, you could be looking at going short here and putting your stop loss way up here above that $31,000 level, and then put your take profit significantly down here at maybe 22 or whatever. You're going to end up still with a really low risk reward ratio, because you're a bit late to the game on shorting, but it is still technically possible to do. I'd much rather say that you're better off kind of looking at smaller time frames if you're going to be shorting the market at the moment. Wait for the next big swing to the upside, because I do think we'll end up revisiting 29K at some point, and then shorting from there will give you the maximum amount of risk reward ratio, and basically set you up in a much better position for a slightly longer term. But there are some smaller term opportunities on the hourly and all that kind of good stuff, so do pay attention to those. I do think there's a lot of fantastic opportunity when the markets are volatile in the way that they have been, but over the weekend I expect quite a boring one. I wouldn't necessarily trade the weekend, but maybe into next week I expect more volatility to the downside. Could be some fantastic shorting opportunities on BTC. Let me know what your thoughts are down in the comments down below. Are you looking forward to kind of seeing Bitcoin come back down lower than 20K over a little period of time here, or are you still kind of bullish on the market, still thinking that this is just a correction, and actually you're going to be targeting out $36,000 or $40,000, $50,000, $100,000? Let me know in the comments down below where you currently sit on that kind of spectrum of things. I'm going to leave the video right there though, guys. If you did find it useful and informative, smash the like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be able to be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done out of the way, guys, I hope everyone has a fantastic day, and I'll catch you all in the next one.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.